all the details at philsgang.com. That's philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Good afternoon and welcome to my podcast. My name is Phil Grande, philsgang.com, where our group has been teaching folks like you how to trade for more than 30 years, I can tell you that. Today and all week has been very interesting and very confusing for the non-professional. If you listen to these people on these business shows, these fake business news networks, you're going to get really confused and you're going to lose money. A good example is inflation is really misunderstood, especially how they measure it. For example, today we're celebrating a rally. Not much of a rally, but a rally. And because they said, well, inflation has fallen. Everybody got giddy, started to buy stocks, and started to celebrate. What are they celebrating? They don't know. If they, inflation's down, as if that's good news. Remember, falling inflation has a real significant negative impact on wages, just like a weak dollar does. You lose purchasing power. It's the same thing. When there's falling inflation, it has significant negative impact on your wages. And therefore, especially the middle class, because we depend on the middle class to do the consumption. If you got rid of the middle class, we're so screwed. They're the ones that does all the consumption. So we have the problem is the decreasing of purchasing power, as I said, for this group. Now, when we are told inflation has decreased, as we were told today, it's decreased, it doesn't necessarily mean that prices are going down. In fact, it doesn't mean that. That's the problem. It doesn't mean that. It just means the rate at which price levels are increasing are slowing. This is what people don't understand about inflation. They don't want you to know about inflation. They want you to think, oh, everything's coming down in price. But yet when you go to, how many times have you gone to the grocery store or whatever and you say, gee, I don't know, man, prices are still up. That's right, because they mislead you. When you get a number like today and they want to throw a party and get everybody all juiced up and get them buying stocks, they don't tell them this. The truth is, it only is the rate at which price levels are increasing, are slowing. That's all it means. They make it sound like, oh, gee, we went from 9% inflation to 1%. Let's go buy stocks. Crazy. It's referred to as disinflation. I know you've heard that term many times. Disinflation means, you can look it up. It just means that while prices are still going up, it's at a slower pace. That's what disinflation is. And they don't explain this to you. And that's what we have today is disinflation. Prices are still going up, but not at the same speed. Instead of a cigarette boat, it's going, inflation is on the Queen Mary. Think of it that way, okay? And so, but again, what it does do, though, it can it can cool down an economy that's heating. Well, we don't have a problem with an economy that's heating up because our economy is not heating up. What they're telling you about the GDP numbers is all BS. It's all crap. I wouldn't trust those GDP numbers. Are you kidding? No way. Those GDP numbers are nowhere close. Nowhere close. And that's why we always talk about when we're teaching our students that you got to learn to follow the money. Don't follow the noise. Every time you put on CNBC or Fox Business or Bloomberg's, they're giving you crap because they need you to consume. They need you to go out and consume. And they need you to buy stocks. They don't want you to sell stock short. They always are pumping you up, making you feel good. And they keep on increasing the money supply to increase stock buybacks, to keep pushing up the stock market, to delay any correction. This is what they've been doing. You're not going to see a correction for some time. As I told you before, you either got to see the increased money supply stop and contract, then you're going to get a correction. Oh, I'm sorry, crash. Oh, no, I can't use that word either. You're going to get a readjustment, price readjustment. Okay, so if they pull back the money supply, there's going to be a readjustment in the price, okay, of stocks. Stock buybacks. Who's the biggest buyer? Corporations. They're buying all the stock. And behind them is who? The retail investor, the tourist retail. They don't know what they're doing. Okay, they're mostly gamblers. They don't want to learn. And then margin debt. As long as we got access to margin debt, as long as we got access to stock buybacks, to corporation, and as long as we keep increasing the money supply to make sure we have stock buybacks, make sure our margin debt keeps increasing, this market can go up for a very, very long time. Trump is a master at keeping this market going. So don't plan on a crash anytime soon. And what will tell you if you're going to have a crash is your bond market. It never lies. Never does it lie. Rising yields always implies a correction. And what do we have when we look at our yields today? They're rising. Look how these yields have rose. It's just unbelievable. It just keeps going up, right? And here we are. Look at this. Now, the big thing is these yields are going to continue to rise even more because the hedge funds who got out of the tech stocks months and months ago have been betting and shorting the yields, the treasuries rather. They've been shorting them, and they're wrong. So they have to keep buying back their stock because they're losing so much money every day. They have to keep buying back their short positions, get out of their short position. That keeps them pushing up the yields even more, which is going to make things even worse. But as long as we increase the money supply, like we saw July and August, think about that, between July and August, money supply went up by 80 billion. And then stock buybacks increased. So this is the game they're going to continue to play. But in the meantime, let's follow that money. If that money continues to go in the market, stock buybacks keep going in, retail investor keeps buying all the stock, tech stocks, they're being dumped by the big boys. Let's keep buying. Keep buying. And again, the important thing is to know, when is the market going to turn around and have a price adjustment? Not crash, price adjustment. When's it going to have a price adjustment? Well, we'll know because the bond market will tell us. Now, so if you think about what happened here, we had, as I said, not good news today. And that's why you're not seeing this market rally big today. Otherwise, this market would be going straight up. Now, they're not going to get rate cuts. Everyone's thinking, okay, well, guess what? Inflation's down, they're going to cut rates. Not going to happen. He's not going to cut 2, 3, 4 more times between now and the end of the year. He may do one, but I doubt that. Just listen to him. He's starting to back up. So, again, this has been bad news today, especially for the middle class, because they are the people who keep us alive. They do the consumption, and this is bad news for the purchasing power, or the wages are diminishing. That's what we learned today, but they're not going to tell you that. So again, just always remember, it's the rate at which price levels, okay, are increasing. They've slowed. That's what you look at. So when they tell you inflation's coming down, don't think of it as we went from 9% to 2 or 9% to 1. No, it's just slowing. That's all, just slowing. So we got slowing inflation. That can change in 10 minutes, okay? Now, wages, well, they tell us wages have increased. What they don't tell us is the increases are not keeping pace with the rising cost of living. This is a big problem we have. Okay, this is a big problem. So they've been hiding this from us. They've been masking this from us. They don't talk about it. This is a big deal because, you know, they keep saying, well, wages are really doing well. Listen to this here. Listen to this dope right here. Listen to how they say how stable the economy is. This gets me. Listen to this.
Things are remarkably stable. I mean, we look at, I know you guys have talked about it this morning and other times, consumer spend continues at the same year-over-year pace across almost all wealth levels. Consumer credit is as good.
Consumer credit is good? Are you nuts? How could consumer credit be good? That's impossible. That's impossible. Consumer credit good? We have never seen, okay, an economy like this where so many people, okay, are, again, they're so far in debt. They have made historic, think about it, credit card delinquencies, automobile delinquencies, mortgage delinquencies are the highest they ever been. And he says this is stable? This is stable? We have the most overvalued stock market in history, the most concentration in history. We got 5 stocks everybody's buying, and we're stable. We have the worst increase in money supply ever, and we're stable. With the worst stock buybacks, that means we're stable. What's he, nuts? And so again, you can't follow fundamentals anymore. Stop worrying about following the trailing PE ratio, the forward PE ratio, price to sales, price to book, return on assets. That's all gone out the window. That's not what you want to follow. You want to follow the money. The money. Where is the money going? We do that every day. We'll help you with that. So delinquencies are really bad. So he's saying we're stable when we got delinquencies? Auto, credit cards, mortgages. And we had, in 6 months, bankruptcies are up 26% personal and 40% in business. Is that stable? Is that what he's calling stable? Is this guy nuts or what? He doesn't know what to do. And listen to him. He's admitting he doesn't know what to do. Let me see, which cut was that? He doesn't know what to do. I think it's this one. I think it's this one here. I'm not sure. I think this is the cut.
Yeah, 2 minutes.
I think this is the stable cut right here. This is the one we're working. Okay. No.
This rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
You know, we're tightly focused on our goals, right? And
He doesn't know what his goals are. But here's the one he's talking about right here.
And we look at, I know you guys have talked about it this morning and other times, consumer spend continues at the same year-over-year pace across almost all wealth levels. Consumer credit is as good as it's been in the last 6 months.
Okay, hear what he said, they're spending all levels. Is that true? Well, if that was true, then why is it when you start looking at the charts, let me pull up one chart here for you. And when you look at right here, this chart right here, give me 1 second to put up. And you see all the money is going to the top 1%. Top 1% is getting all the money. That's where the wealth is. And it's not going to, the middle class or the working folks is not going there at all. And again, I'll get this chart. Let me see if I can find this chart for you. I mean, it's just crazy. Let's see, I think I have it in here somewhere. Let's just take a big look at it. Let's see. Oh, here we go. Look at this, wealth. Here we are. Look at this. Look at the wealth gap right here. That's insane. Look at the wealth gap. Are you kidding me? When you look at I mean, it's all with the 1 percentile. Everybody else is suffering. That's insane. That's nuts. People are having a tough time. So again, we have, and look at if you think the economy's good, then why is it that freight shipments, I talked about this yesterday for quite a while, freight shipments are down. People aren't buying stuff, and they're saying how great things are, we're stable. Follow the money, learn how to sell sharp.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com. Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. So again, he's telling us how good, consumers are really doing good and they're stable, right? Does this look like it's stable? Take a look at this. U.S. credit card delinquencies. Look at this chart. The highest in 14 years. Does that sound like it's stable? See, they just keep lying to us is what they do. They just keep lying. And again, here's the other problem, is when you look at the wealth, it's going to the wrong spot. Look at, here's the 1 percentile. They're getting richer and richer and richer because of the stock market, because of stock buybacks, okay? And look at the wealth of the most important consumer, the middle class, 35 years old to 45 years old, couple kids. He's getting hammered. Look, he's getting hammered. And he's saying everything's good. Powell saying everything's good. Look at this, total debt balance. Look at the debt balance here. Are you nuts? Historic debt. They're dying. The consumer's dying. He says, oh, everything's stable. Look at this, Richmond manufacturing. Look at this. Are you kidding? It's collapsing. It's collapsing. Just like it did back here in 2008, 2009. Just like it collapsed right before the dot-com, right before the housing con. Now we're in, again, our stock buyback con. So we had the dot-com, that fraud, housing financial fraud. Now we have the stock buyback fraud. Does people really think we're not going to pay for years and years and years of the stock buyback? Give me a break. Of course we're going to pay for it. Okay, but again, they can expand this for years. But what they're doing is they're creating a bigger and bigger and bigger bubble for us. But they don't care. Congress doesn't care. Because these Congress people, they're in there, they're buying stocks. Look at this here. Freight. Look how freight is collapsing. And history's a wonderful thing. Let's go back to right before the housing crash, financial crash, 2009, right? Let's take a look. Look how the freight, right here, freight crashed. Freight shipments crashed. And then look at right before the 2020 COVID crash. Look at this. Before we had the COVID crash, we had a warning with a freight crash. We had a warning with the freight crash right before the housing crash, right before the 2020 crash. And here we are. Same thing's happening now. Look at the freight. It's collapsing. But the difference is they're using the stock buybacks and debt. Remember, these companies have historic debt. They're borrowing, they're borrowing from the government. It's just insane. Yet the top 1% are getting so wealthy, and it's going to be very dangerous. But the idea is if you keep buying your top stocks, follow the money where the money is going, keep buying, put your stops in, but be prepared not to turn around and buy Clorox or Pepsi or Coca-Cola or Hershey. That's what they tell you to do. Oh, when the market starts collapsing, go buy Coca-Cola or Pepsi, you're going to be safe. No, you're not. No, you're not. The only way you can be safe is to learn how to sell short. That's it. Now, this guy's saying we're stable. This guy is nuts. We're having a cost of living crisis in this country, and they're saying we're stable? Wages are not keeping pace with the rising cost of living. That is a crisis. So how can he say we're stable when we have this terrible, terrible crisis? Cost of living crisis. What's he, nuts? Now think about this. Over the past 5 years, rates, the Fed rate has increased in 5 years from 0.08 to 4.25. Think of it this way here. 0.8 of a point, and it went up 425 points. From 0.8 of a point up 425 points. Look how think of it that way. That's huge. Huge. It's unbelievable rates. That's why people are in trouble. That's why they're filing bankruptcy. That's why they can't pay their car payments. Now, then we had the 10-year yield at the same time in the last 5 years go up from 0.64, not even 1% yet. Not even 1%. Shot up to 417 points. Not even at 0.64, that's not even a point. It's like almost 3/4 of a point. We went from about 3/4 of a point to 417 points in the 10-year Treasury yield. It's the same thing with the Fed. And you're wondering why our cost of living right now, we have a crisis? Because we can't keep up. We can't keep up. Our wages aren't going up. In fact, if you look at our wages on a chart, from 2020 to 2025, wages increased by 17%, but prices are up 22%. Oh, nobody's going to tell you that, are they? No, they're not going to tell you the truth. And then you always look at consumer sentiment. How do people really feel? And you talk to people in the supermarket, I do, because they see me, they know who I am, and they go, look at these prices, Phil, look at these prices. 71% of Americans are saying it's much harder to get by today than 10 years ago. So when we keep hearing how great the economy is, it's just not true. It's just not true. So the problem we're still having, okay, is we don't have substantial wage increases. And when we do, it's getting eaten up by inflation. And by inflation, that's the terrible thing. So, and the problem is there's tremendous wealth in this country, but it's all going to a very few people, the top 1%. And the real danger, what's going on, is all these corporations are taking all this free money and they're doing stock buybacks. They're not increasing productivity. So that means hiring is down, wages are down. You remember how the economy works. If you go in and you have $1 million and you put into new machinery, new equipment, business investment, what happens? You're producing more goods, okay? More goods. If you're producing, let's say 100 widgets an hour, now you're producing 500 widgets an hour. Company gets profitable. They start hiring, wages increase. That's not what they did in the last 10 years. In the last 10 years, what they did, they said, screw that. Let us get rich in Congress. Let us get rich in Wall Street. Let's put this thing together where we do nothing but stock buybacks. So the stock market looks like it's going up almost every day, which it is, but it's going up because it's financially engineered to go up. Unbelievable. Again, when you look at right here, let me show you this. This is crazy. When you look at right here, the stock buybacks, this is my favorite chart. This is why the market's going up. Look at this. Look at the stock buybacks. That's why the market is going up, right there. And as long as we keep doing that, you're not going to get a correction. You're not going to get a correction. And your Cisco and your beloved NVIDIA is another Cisco, and it's going to end up like Cisco. And here they are, right here. Look at this. Look at this. This is crazy. If you look at, again, the NVIDIA, okay, has gone up 4,154%. 4,154%. From, I think it's around 2000 to 2025. Now look at this is NVIDIA in red. Cisco, look at Cisco. It too, 4,123. So Cisco, yesterday's Cisco, okay, is our NVIDIA today. So the same thing is going to happen to NVIDIA that happened to Cisco. There's no question about it. No question about it, okay? And when you look at the valuation, this is what's really scary right here. When you look at the overvaluations, okay, right here, look at this. This is real scary. Look at this. This was the 1929 crash, 1966, 2000, the dot-com crash. Look at this, where we are. Across the board, the overvaluations, we're more overvalued than during the 1929 crash, during the 1960 crash, during the 2000 dot-com crash. We're more overvalued now than back then. But the market can keep going up. Market can keep going up as long as we do stock buybacks, okay? That's the key. So the stock market right now, if you're looking at stocks, okay, we purchased, for example, on September 15th, okay, we bought IBM on September 15th. Why did we buy it? Because what it does, it's earning? No, because money was going in. On September 15th, I'll get you how much we made on it. September 15th, it was trading at 254. Our chart turned from red to green. It gave us a buy signal, okay? And everything was lining up perfectly. Today it's at I think it's 286 today, 286. So what does that gain, Willie? 12. So that's a nice, clean 12% gain with such little effort, because what did we do? We followed the money. Now let's take a look at gold. When nobody wanted gold, I said, we're going to buy the miners, because everybody's going to run to gold, because everybody knows when the hedge funds got out of tech, when the big guys got out of tech, the hedge funds and the big institutions, they started to buy gold. We started to buy gold. And GDX is up 92%. We got into GDX several times, okay? Because you got to keep taking profits. But you go back to GDX. Our main buy in GDX was on August 4th and August 5th, right there, back there. And that was then about $53. Today it's $75. Today it's $75. Look at GDX. That's a 41% gain. But what were we doing? Were we following the fundamentals?
You got 3 minutes.
No. We care less about the fundamentals. Who cares about fundamentals? You don't follow those are gone. They're done. Okay? There's no more fundamentals. You follow the money. Then as long as you have a chart that shows you where the money is going, that's what's important. It's called pricing. That's what you want to go after, the price. Now, we had, let me just show you another, here's another one, okay? So that's GDX. Now let's take NVIDIA. Everybody's in NVIDIA. Are you nuts? NVIDIA is going to crack, and you can see it. Now, does it mean NVIDIA can't keep going up? Sure it can. More stock buybacks. I mean, as long as you have stock buybacks, the market won't come down. But at some point, they've got to stop with the stock buybacks. Remember, stock buybacks were real illegal, but Trump loves stock buybacks, okay? He loves to see the market keep going up, all right? And so while the manufacturing is falling apart,
2 minutes.
Corporate debt is getting bigger and bigger and bigger because of these stock buybacks. And at one point, one day, one morning, you're going to get up and all of a sudden the market's going to be down 3,000 points, 2,000 points. You wait and see. You wait and see. But you should not get caught in that. You should know well before that event happens that it was going to happen. And you will know that if you follow the money, not the BS. You can't, if you follow this kind of stuff right here, you're going to get killed.
It's not a bad economy or anything like that. We've seen much more challenging economic times, but from...
This is what he's selling. Not a bad economy. It's a terrible economy. I mean, think of the business bankruptcies, up 40%. Historic national debt, 38 trillion. Record deficits, 2 trillion. Construction spending, the biggest drop since 2008. We haven't seen that in so long. Manufacturing, okay? We just, in 2023, we lost 178,000 jobs. That's below pre-pandemic levels of 2018, 2020.
30 seconds.
So, look, it doesn't, again, you just got to know how to follow the money. As this market keeps going up with stock buybacks, let's keep making that money. Don't be fearful. The only way you're going to get rid of your fear is if you know how to position yourself, that you understand, looking at a chart and the money, that, okay, this thing is ready to crack. And we can teach you that. It's not hard. And then teach you how to sell short. Don't go buy Hershey or Clorox. Learn how to sell short. Okay, that's it for today. I'll see you tomorrow in the chart.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.